Hi guys, how are you doing? Welcome back to the channel Milking Pips. And there's a lot that happened, and there's a lot that would be happening. So we would be looking at everything out there. And before we jump into deep understanding, we have to actually go through the process in order to understand the fundamentals behind it. And then we would be looking for the trades. We would be looking for the weak pairs, strong pairs, and how things are specifically developing. So what we are looking here as at the gold right now, that uh, the changes in the last 24 hour, the gold uh, rose around like 1.08%, a good move. Similarly, silver was bullish, copper was bullish, and oil was bullish. Natural gas minus 6.07%, already uh, a bearish move in there. And PTC was bullish and ETH was bullish. SPX was a little bit bullish, and similarly FTSE is also bullish, DAX is bullish. And when it comes to the calendar at for today, that is Thursday, we can see right here that Swiss PPIs for the monthly data would be announced. So the previous is 0.1 and the forecasted is 0.2. So what is PPI? PPI is the change in the price of goods and raw materials purchased by the manufacturers. So it's the changes in the price and the raw material that the manufacturers actually purchase. So it is a leading indicator for consumer inflation. When the manufacturers pay more for the goods, the higher costs are usually passed to the consumer. So if the manufacturers are paying more, so it would be actually affecting the consumers. So we do have like a Chinese yuan a new loan data that is coming out. So the value of the new yuan denominated loan issued to the consumers and businesses during the previous month. So it's like loans that are issued. So borrowing and spendings are positively correlated. Consumers and businesses tend to seek credit when they are confident in their future financial position and feel comfortable. So it seems like the idea behind it is that when there is more borrowing, so it means that there's more spending. And if there's more borrowing, so of course it is specifically the the growth of the business that would be eventually uh, uh, increasing the confidence in the currency. So greater is good. So we can see right here that there are less loans taken. So it seems like the data is really bad in the forecasted one. And then we have like a money supply M2. So the change in the total quantity of the domestic currencies in circulation. So it is the money supply, means that the total quantity of the domestic currency in circulation. So it is like the amount that is circulating or being deposited in the banks. So it is positively correlated with the interest rates. Of course, like the money is correlated with the interest rates. If the interest rates are high, so it means that people would be more tend to deposit money in the banks in order to get the profit. So if there is a low interest rate, so it would be invested into the businesses. So early in the economic cycle, an increased supply of the money leads to the additional spending and investment. Early in the economic cycle, an increasing supply of money leads to the additional spending and investment. And of course, like the increase of the money supply, that means that additional spendings into the investment later cycle expands the money supply, leads to the inflation. So money supply is directly linked to the inflation, as well as if there is a lot of money being printed out by the central bank or the state bank, uh, or the big institutes who actually manages the monetary policies, it would eventually lead to the inflation as well. So then we have Euro Italian quarterly unemployment rate. So the unemployment rate is actually the percentage of total workforce that is unemployed and actively seeking employment in during the previous quarters. So although it is generally viewed as a lagging indicator, and the number of unemployed people is an important signal of overall economic health because the consumer spending is highly correlated with the labor market condition. It is also known as joblessness. And so we are having the Italian data for the euro that is coming out, and then industrial production. That's really important because of the tariffs. So the change in the total inflation adjusted value of the output produced by the manufacturers, mines, and utilities. So it is like the output that is produced by the manufacturers. So it tends to have a relatively mild impact. So it is a leading indicator in the economic health. Production reacts quickly to the ups and downs in the business cycle and is correlated with the consumer conditions such as employment level and earnings. So of course the output, if there is more output, of course there's more demand and more employment would be required, and it means that the demand is there, so consumers are actively buying the product. So that's why it is really important specifically to the economic health. And we do have a building permits for the Canadian dollar that would be coming around 8:30 a.m. That is the New York time opening. So the change in the value of the new building permits that are issued. So it is an excellent gauge for the future construction activities because obtaining a permit is among the first step in the construction of the new building. And then we have US data that is coming out, and we can see that it is a really high impact data that is being built up, and we see that the core PPI is similarly so the finished goods and services sold by the producers, excluding the energy, food and energy. So it is the prices of the finished goods and services which are sold by the producers. Then we have PPI monthly. That is the similar thing, and but it includes the whatever that was excluded, like food and energy was excluded here, so it includes the food and energy as well. So it is more important. And then we have unemployment claims, really important data, specifically represents that how the number of individuals who filed for the unemployment insurance for the first time during the past week. So overall, generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall health economy, and consumer spending is highly correlated with the labor market condition. Unemployment is also a major concern, and the nation's earliest economic data, the market impacts fluctuates from week to week. We tend to focus when the new traders need to diagnose a recent development and when readings are extreme. So extreme readings are more beneficial to increase the volatility in the market. So we can see that overall, like the core PPI and PPI monthly seems to be a little bit of decreasing, in a sense that we can see that this simple PPI that is not core uh, seems to be decreasing that. And the last month PPI was around about like 0.4, and that is a decreasing trend because the previous one for the Feb was like 0.4, and for the Jan it was 0.2 right here. So it actually like goes in the form of a downtrend right now, because you see that if you see the let's consider from the December 2024, that actual was 0.4, and then 0.2, and then 0.4, and now it might be coming around about like 0.4 or 0.3. So there are like small changes that are actually occurring. So that's all from the PPI stuff. Then we have a natural gas storage, really important uh, data that is coming out, because we saw that the natural gas has declined around about like 6.26%. So the changes in number of the cubic feet of the natural gas held in the underground storage during the past week. So inventories are used to maintain the price stability during the supply shortage and periods of the increasing demand. So it is the natural gas that is held into the storages, and actually less than forecast is good for the currency. Because why actual less is good than the forecast is because if there is a more storage in there, so it means that the less consumers has bought it, or you might not have even used it. So that's a bad deal, and we can see that it was 80 billion, and now it is coming at like minus 46 billion. So seems like the data is getting a little bit positive right now. And then we have like 30-year bond auction. So the highest yield on the 30-year bond the government sold at the auction and bid to cover ratio of the auction. So yields are set by the bond market and the investor, therefore they can be used to decipher investors' outlook on the future interest rates. The bids to ratio represents the bond liquidity and demands, which can be used to gauge the investors' confidence. So let me explain you about like bond yields, guys. So bonds are basically issued by the government, and as a consumer you can purchase it. So when you purchase it, you would be getting the interest and your principal amount back. Along with that, you would be getting the cumulative yield out of it. So if you're getting a better yield for a discounted bond, that actually means that that aligns with the good currency. So this is how it is linked. And German president speaks, and then business New Zealand manufacturing index, really important data that is coming out for the New Zealand at 5:30. So it is a survey of the index based on the manufacturers, and survey manufacturers which ask the respondent to rate the relative level of the business conditions, including the employment, production, new order applies, suppliers and deliveries, and inventories. And then FPI means the changes in the price of the food and services purchased by the households. Really important data at the basics. So how much changes are there in the food and services purchased by the households, and actually greater than forecast is good. So it means that if the more buying is done, it means that the prices are being stable and people can afford it. And although the food is amongst the most volatile consumer price component, this indicate garners some attention because the New Zealand major inflation data is released on the quarterly basis, and that's the data that we're coming out. So guys, it's really important that the time, specifically duration, based on the Eastern Standard Time, that is a New York time, we should be working around like 5 a.m. to around about like 1 p.m. or something like that. It would give us a wonderful opportunity at that moment. So this is how we are looking at. So let's look at a little bit on the side of a news and stories that what is specifically going on. So Ukraine US ceasefire talks took 7 hours. The hard part will be getting Russia to agree. So right now the Russia hasn't agreed, and now all eyes are on the Moscow's, and let's see how things run. So what is the chance of US recession? JP Morgan economist sees heightened concern. So most probably like people have started talking about recession right here. So recession means that there are not much of the investments done in the businesses, and there are the economy, money supply is actually not flowing. So this is what leads to the recession. So let's see that how things actually looks like. So the chief economist of the JP Morgan says that where we stand now is with a heightened concern about US economy, and it happens, it is always being said like that, guys. So there's nothing to worry about. It's just like to create a hype in there. So inflation guys, US CPI summary. So inflation summary for the United States, that is shown here in the next data. And then we have some of look at the breaking news within the 12 hours that we did have like a consumer price index, that is an inflation adjusted. And we can see right here that, let's look into that as well from here, from the previous data, so that we can actually, so we do have like the CPIs here on the Wednesday that came out. So a little bit of inflation has been decreased. So the forecasted one was like 2.9, so 2.8, it became 2.8 right here. So inflation is like really important, that the changes in the price of goods and services purchased by the consumers. And consumer prices actually accounts for the majority of overall inflation. Inflation is important to currency valuation because rise in prices can lead central banks to raise the rates. And this is how it works, that it is directly linked with the interest rates out there. So this was the data that actually came out. And we can see that mostly like the inflation went to 2.8 from 3. That's a big decrease, but it's not a big decrease in a sense that US usually maintains the inflation around 2%. That's the ideal position for them, because see, if there wouldn't be any inflation, there wouldn't be any projects running. So governments has to use some of the inflation in order to like run the projects and big businesses to develop. Like there wouldn't be more entrepreneurship if there wouldn't be anything like that. So then we see that ECB launches second $1 million trading challenge. Okay, this is an extra. And so what is there in the latest? Bank of Korea says wary of the FX volatility on the trade war risk. So this is important for us, that Bank of Japan governor says that the price tends still below 2% target. And so it says that, so the target for them is around about like below 2%, and they're fine with that. So it's like more about the inflation aspect out there that they're talking about for the Japan. And let's see that did we had that data for yesterday as well. I don't see JPY right in there, so they might be like discussing it in the meetings. And Bank of Canada, by the way, cut the interest rates by 25 basis point. It is shown right here. So Bank of Canada like cut the rates from like 3% to 2.75%. Although it is like negative, it has negative impact mostly on the currencies when their interest rates are reduced, because then people take out the money from the banks and try to put into some businesses out there. So for overall economy, it's good. But if the interest rates are there, if there are like a lot of interest rates, people would be actually not putting the money into business. So it's like really important to like actually keep a good balance between interest rates and also in the inflation. So it's like a seesaw, so you have to like balance both of them. And there are like other factors like employment, and CPIs and other PPIs, these type of things that actually develop that. So actually then Feds will likely cut the rates this year. So it's like a Yahoo Finance news, because we do remember that the chairman Powell was saying that he isn't interested in cutting the rates right now, or he's not in any hurry. So but it says there are different kind of news out there. We actually need to understand that whatever things are aligning with us would be more interesting. So let's look at the outlook of the currencies. So Euro USD has raised around like 0.2%. Yen has also uh, JPY is also stronger. Euro is stronger. JPY is stronger. Pound is stronger. Swiss is stronger, and Aussie is stronger. Aussie is not stronger, by the way. So if we see a heat map right here, let's see this. So Euro USD right here in front of us. So it seems like euro is getting the strength, so it shows that the dollar is getting a little bit weak. Pound hasn't gained that kind of strength right now. It's like a little lower than the euro. And then we see that USD CAD right here. So CAD is showing the weakness right here. USD has started forming a momentum, but we see that right here with the euro, we see like a positive number right here. It seems like the dollar is going on the downside, but when we see in compare with the dollar with the Canadian dollar right here, we see that dollar is rising. So that's a bit of an ambiguity right now. It seems like the CAD is the weak pair right here, and then we see that with the yens are stronger, and then we see that Australian dollar right here, Australian dollar is actually weak, and we see right here USD CHF that Swiss is weak but dollar is a little bit strong. So it seems like yen is the strongest right now. So JPY is the strongest one right now here, and the CAD is weak, Swiss is weak, and then comes the CAD. Then comes the Swiss, and then comes the CAD. If we compare it with the in the strength, and if we see the euro right here, euro is strong, pound is a little bit weak, and Australian dollar is weakest. So I don't think so they're showing the Australian dollar or like NZD. We have to like actually see NZD later on because I do trade NZD as well. So let's see the indices out here. We see that the DXY has like gone a little bit on the downside. Japanese yen has went really on the downside. Their index went on the downside like -28%, but it's not aligning right now here. Yeah, so the Swiss franc, we can see that the index has rose a little bit of it. Euro index is down, British pound is a little bit positive, and Canadian dollar is index is going on the upper side. So this matter a little bit if you can actually relate it to these pairs as well, but we would be more focusing around at this point. So let's see the heat map right here. So if we look at the heat map, this is really important, and I think I have explained you how to read that. So let's consider that we do have a pair like Euro USD right here. So we can see that I don't know why it's showing black, or what does the black mean right here, because it's like maybe the data is not coming out, but it's still positive. But if we see that euro with the yens is really red, it's like -22, it means that yens are super strong. And we see that with even USD the yens are strong, with pound yens are strong, and with Swiss yens are strong, and with Aussies yens are strong, and even with the Canadian dollar yens are strong. And when it comes to like Swiss right here, we can see that so if we see like CHF JPY right here, we see that Swiss is weak in front of yens as well. And then we look at the Canadian dollar. Let's see how it is performing with USD CAD right here. with USD CAD. If we see that USD is stronger, the Canadian dollar is weak. Then we see at Euro CAD, it's like Euro is stronger. That's why its whole part is green, because the Canadian dollar is weak as compared to these pairs. So we check that in the correlation aspect, because this is how you measure it. Like, you can take any reading from, you can take like this part only to read, or you can even take this down part as well. So you can only read only one part, that would be enough for the understanding. So then we can see that how the Australian dollar is actually reacting. So we see like Euro AUD, Euro is strong, and then we see that then Pound Aussie, we can see that Pound is a little bit stronger than the Euro in as compared in front of like the Aussies. So then we see that how Australian dollar is reacting with the CAD, Australian dollar AUD CAD CAD. Right here we can see that Australian dollar is strong. So this is how the heat map looks. But overall, what I want to point out is something really important, that if you see yens right here, yens are quite stronger. And similarly, if you see the CAD is quite weak right here. And if you see the Australian dollar is also quite weak. That's why we have this green bar right here. It shows the weakness. The yens are stronger, that's why it's showing the red right now. So in the next few streams, guys, you're gonna start understanding what I actually mean. I understand it's like a bit complicated, and it would be getting boring for you guys. So let's see some of the news and top stories out there. So Bank of Canada cuts the rates to like 2.75. We've discussed that. Then we see that the euro rockets to 1.08. So euro is like continuously bullish, that's what it means. And they're talking about a defense plan. And then we have yens that is gaining against the dollar, and things are reaching to like different outcomes. So let's see the more news that is more on the side of the breakings. So New Zealand dollar gains. We have seen that news in the other website as well. So it seems like it would be interesting to understand that what is happening. Australian dollar is gaining back or subdues greenback. So Australian dollar is also gaining a little bit of strength. Euro has lost 0.25%, and similarly we can see that RBI is known as New Zealand tells the board to nominate external candidates. So it's like their internal data that is coming out. Asian currencies consolidates aimed risk rising global trade tension. So Asian currencies is having a little bit of a trade tension between them with the tariffs things, and then sterling is gaining, and Bank of Japan hopes to spend time gauging ideal size balance sheet. And these are the general data out there. So I believe that's all. So let's see, guys, like this general outlook wouldn't even like take much time, and it would just give us a better understanding that how things are looking, because of course we're gonna look at the price action and the charts, but we need to understand what's the story behind it. Because if there is no story, how we're gonna like trade blindly? So it's not how the currencies work, because in crypto you can trade like that, but based on the supply and demand, of course. But you need to understand the background of the things, that how the things are actually looking into the market and what are the fundamentals behind it. So eventually what I was hoping for, that we would be looking at some of the gains around this point, but what end up happening that the prices are still in the channel on the downside like this. So I can't see any break right here. Of course, things are in front of you, and if there is no break, so there is no interest. That's so true, because as a trader, guys, what you can do is, of course, we would be following the historical data, right? So there is no other option for us as a technical trader. So we can see that this part was like the election part which we discussed, and as a technical trader right here, we can see that the prices is getting into a channel right here. So let me draw a channel for you guys so that it would make enough sense for you that what actually channel is. Right here. So see, this is a channel right here. So when the prices are in the channel, then they usually tend to go into the range afterwards, and when the range actually develops, then there would be a breakout on the upper side or on the lower side. But we can see right now that there isn't much happening in DXY. Prices are still like in this range. We can even consider this part as a range high and range low. Let's consider it like that if it seems more convenient. So but there is nothing that is actually happening, and if we kind of like zoom in a little bit, we can see that the prices are actually holding around 103 level and 103,500 level, although they have broken around like 104 level, but now they are around like about like 103,500 level, a good round number as well. So let's see how things react. But most probably like what I would be interested in, if the prices kind of like break out of this 104 level actually, rather than like upper level. I would be preferring 104 level because it's a round number. So if there is in any case like the prices would be interested to break on the upper side, I would be looking at that. But overall it seems like there's nothing happening in here. So let's move to the other pairs. But it's really important for you to remember that sometimes DXY isn't moving, and when DXY isn't moving, it doesn't mean that other pairs are not moving. So we would be looking at the volatility and other pairs as well. So right now we have USD CAD, and the USD CAD looks like we can see a double top right here. That is a peak formation, and then another peak formation that has developed. It can be also regarded as like a small head and shoulder, right? And this was a neckline right here. So what we are actually doing, and what actually I'm saying. So as we can see that we have noticed and witnessed that the Canadian dollar is not strengthful in the heat map. So most probably like I wouldn't be willing to sell the dollar, because the Australian dollar is weak. Of course we are getting this pattern, but this pattern doesn't matter if it isn't aligning with the fundamentals out here. So let's look at the daily chart, how this current opening is. So we can see that this is the first red day here, and it was the Wednesday that the red day developed, because see the interest rates for the Canadian dollar went from 3 to like 2.75, right? And when the things like that happen, we usually see the weakness in the currency. So most expected thing that was supposed to happen was the bullish pump that would had occurred, but we actually didn't see that bullish pump, but instead the price went on the downside. And on the other hand, we see that the price opened around here and pushing on the upper side. So I don't know, guys, like when this price would start reversing around or something like that. But what I actually know that the price is, if this is the opening price right here, If this is the opening price right here, let me make it of a different color. Let's make it red like that. So if the prices are opening around 8 p.m. right here, so we can see that there is a small pump that actually happened, and right now the price action isn't that clear, but selling the dollar in front of CAD, I don't think so that's a wise choice, because of the fundamentals out there. I believe that I wouldn't be much probably looking like that. I want a weak CAD. I can't weak USD right now, because although USD is quite weak, but CAD is also weaker as compared to the other pairs. So as we saw that in the heat map when we started streaming. So let's go to the USD CHF. So USD CHF right now gave us a little bit of a breakout around here. So dollar got a little bit of a stronger around here, and started giving us this pin bar, a big long legged pin bars here, and it's like kind of like a doji candle, long legged doji, and we can see that prices are turning a little bit around. But the most important thing to understand that the idea is that there should be a clear move. This is not a clear move that we actually were expecting. And similarly, USD JPY, we can see that the yens are getting a little bit stronger here, pushing the dollar down. And similarly here we can see that Swiss was getting more stronger and pushing the dollar down, and here the yens are getting stronger and pushing the dollar down. Although this structure seems really legit, you can see that this is an order block right here, and the prices just went into this order block. There was a break of structure that happened around this point, and after the break of structure, prices went on the downside, making lower lows and lower highs, and then we saw a big break on the upper side that can be regarded as a pullback. And after price came back and retested this zone from this point, we can see that prices are making a downtrend from this point. So although it seems quite genuine right now with this type of candle being developed, so dollar might be getting more weaker from this point, as we can see that this could be a good valuable opportunity if somebody wants to trade. But for me guys, I might be preferring that if there is a swing failure pattern around this phase as well, and then prices come back here, so then I would be much preferably entering from this point. But like, it depends upon the scenarios, and right now it seems quite legit in order to enter, and a short position from this point to this point can be a really valuable, because it's around about like good 89 pips right here, because we are looking at a bigger time frame chart. So it doesn't mean like a small moves are not that small, by the way. Like, it's just 4-hour time frame which we are looking at. So similarly, Euro USD, we can see that, so we had an alert right here that we placed. So in that case guys, you can see that price is making like lower, higher low, higher high, higher low, higher high, and even pushing back up. But here we can see that prices actually failed to go on the upper side, but instead it reversed, giving us this railroad pattern. So this is a railroad pattern that when the prices go up, they come back down similar with the similar strength, and most probably like how it actually works, that when the prices goes up, then prices went down, and then prices actually start moving on the downside. So it's kind of a reversal pattern as well. But overall, I can't say that it's reversing around here, because for me the criteria is quite different for reversal. And I told you that it's not like this trend line break or something like that. I want a proper structure break, and as far as that concerned, I would be willing to wait. So Euro GBP gave us a wonderful move today. I was quite impressed with the move that happened. Specifically, I was looking at this 15 minutes time frame. So it was about time that was we were expecting the Canadian rates as well, and also we were having the CPI for the United States. And what actually I was witnessing that the prices, you see this type of the candle actually develops around here, and I wanted to take a short position around this point. But the good part is that I was actually busy and I didn't want to actually take the position at that moment, because of course as a trader you have to have a perfect peace of mind when you're taking the trade. So what it is just a setup from me that I actually placed, and what ended up happening, that prices went on the upper side, touched this level, retested this zone around here, and after that we can see that the prices went on the downside again. Now the prices are pushing on the upper side like that. So let's see how things are actually developing. But euro gbp actually means that euro is getting a little bit stronger right now, but overall the euro is weaker than the pound. This pair shows that euro is weaker than the pound. That's why we are looking at like this big bearish moves, and we can get a reaction around again. That might like make me more interested, that if we get a reaction around this order block zone, or even around here, if the prices goes back up and started failing around, so we can get a move like that. So it can be a great early signal right now that euro is losing the strength. But overall the price action has to unfold right now, and even like if you are waiting for this level, it's fine. But it seems like currently that euro is gaining strength based on this sorry guys, based on this movement that is actually happening around here. We can see that euro is gaining a little bit of strength, and it might even break out right now. So you see the candles, how candles are actually forming with the high intensity bullishness in there. So it might even like go on the upper side like that. So because overall the trend is bullish, so it might be even like literally like it seems to be a really solid position to enter along from this point, and ride it till this point, and there's a small stop loss around this point. So this is what actually it looks like. And euro gbp is one of my favorite pair right now that I would be looking at. So I have noted this pair down, that euro gbp I would be interested in, and let's see how things develop in there. Similarly euro odd, we can see that euro is gaining a little bit of strength against the Aussie dollar, and similarly euro nzd gaining the strength, and euro cad, we can see that the strength isn't that much right now in the euro as with the in relation to the Canadian dollar, but there is a strength. Then we see with the yens, the euro isn't gaining the strength against the yens, because the yens are super strong. They're pushing the euro on the downside. And similarly euro swiss, we can see that euro is gaining a little bit of a strength against the swiss as well. Then pound is still on the move on the upper side like that. Pound is still strong, similarly to the euro, because of like the dxy right here. We can see that dxy was making lower lows further going into the channel, parallel channel, and the breakout is happening a little bit. There was a pullback, and then the price continued on the upper side. So most probably like it might continue like that, because the way the price action is actually developing, we can see that there was some certain range that actually developed, and there's another probability guys, like for example we actually have to wait for the range to develop. So this could be the high point, this could be the low point around here, and price is actually like the forming the structure in here. So let's see that how this range actually develops. And similarly we can see that in pound we can see the strength against the Australian dollar as well. We can see the strength against the New Zealand Kiwis as well, and then CAD as well. And Again with the yens has reached. This is the pound yen, like the most important pair. It's like a most risky pair out there that moves one of the it is basically known as one of the fastest pair in the forex industry that moves really quick, and it has like a high ATR actually. So we can see that the prices has reached to the level of resistance up here. So this is like a first touch, this is a second touch, and this is a third touch, and we can see that a swing failure pattern also being happen around here, taking the liquidity, and now the yens are pushing the pushing the dollar, pushing the pound down. So I would love to like take a position in there as well, with the suitable opportunity, but overall it seems that most likely yens are getting like quite stronger than other pairs right now. So similarly GBP CHF, we are seeing a little bit of move around there, and Australian dollar, and overall you see like the pounds and then pounds and the other one like euros, they were stronger, but Australian dollar seems to be a little weaker. And if we compare it right now with even like euro and pound, if we compare it with the pound, you see that it's not as weak like it is the euro. The Australian dollar is weak, and similarly we can see that Australian dollar had yesterday we were discussing this specifically, that how the breakout has actually occurred around this zone, and this was the breakout that was happening. But I told you guys that for the breakout we had an alert right here, and I would be loving to see this alert triggered, then I would be getting more interested. But still Australian dollar is much weaker than the New Zealand Kiwi. New Zealand Kiwi is the third last, and then Australian dollar. So again AUD CAD, we can see that Australian dollar is weak, getting a little bit of weakness against the CAD. The prices are holding around this point. It's like literally like wicks developing, like each time the price is pushed on the upper side, and the seller dump it. So it's a great sign instead. So this is the third pair that I would be actually looking at, because of the way the price action is actually developing. So then we have AUD JPY. We can see that a great amount of strength in yens pushing the Australian dollar down, and similarly a great instant intensity with the Swiss as well, that the Australian dollar is being pushed down. And then we have like New Zealand dollar right here. We can see the similar type of reaction in the New Zealand dollars, that they are being pushed down by the against the dollar. And if you see the CAD, New Zealand CAD, we can see that New Zealand CAD is also getting a little bit of weaker, but it would be much interesting to see it in the daily. We can see that how the daily is developing, that we got this doji candle in there, and right now the price opened around here, and now the prices are starting to push a little bit on the downside. Seems to be a early bird in a sense that, so uh, with the early bird, there's a saying that you shouldn't be a first mouse to get the cheese, because whenever there's a first mouse who goes to get the cheese, he get trapped, but the other mouse gets the cheese. So we can't be that early, we can't be that late. So it should be based on your own intuition right there. So again we can see that this is a uh, wonderful move that is happening around in NZD JPY, because we see that there is a weakness that is happening. And similarly NZD CHF, there's a weakness that is happening, and CAD JPY, much interesting, like CADs are being pushed on the downside. I seem this is a legit setup right here. Much interested in that today. I might be even like taking this setup, because because of the move which is on the downtrend, and again this pullback exactly to my level right here, and then we can see that the break of structure is happening. So much more interested in this setup right now, and maybe after stream I might be like even entering into this. And again, like CAD CHF, not much of a move, and seems like CAD and CHF are both in a little bit of an harmony right now, ranging. Oh, by the way, guys, like this is the trade that I took yesterday, and I even shared it with you guys, by the way, guys. So if you have missed it, it's your problem. It was like a wonderful opportunity, and I was able to like capitalize a lot better than like the other trades which I take, and really a easy setup out there. And what I want to do is I want to like show you, this is the channel right here, guys, if you're following. So this is the trade which I gave, like Swiss franc versus Japanese yen. See, this is the screenshot even which I took. I explained the setup for like 3 minutes and 22 seconds, and it was a wonderful opportunity. So if we see right here, I was explaining this setup right here. See, this is what I was telling you guys, and if you see right here, this is what I was explaining you, and I was saying that there could be a chance of the breakout, and see the breakout happened, and I was able to like secure my profits around this point. But the reason of not holding it forward, because of like the CPI was being announced, and I thought that I don't want to like lose any cent of it. So that's all, guys. That's all. So let me see that if there are any questions or comments from you guys, so I can actually look into that as well. Anyway, guys, I think there is no comment and or anything like that. So it's a wonderful time or opportunity to trade. Don't worry, like the prices are like so seriously consolidating. Don't worry about it, but always manage risk, and lose what you're willing to lose. So there's a saying that when you're like putting a trade, just consider it that you are cashing a check. So if you have like written a check on a checkbook, you've written the amount, so it means that that amount can't be changed. So it's the similar thing like that. So don't impulsively trade, don't uh, overput the trade, don't like don't start scaling in on the losing trade. Even I would recommend like don't start even like scaling in on the profitable trade like that. Instead, try to hold it, understand the pain when you're holding a position, because holding a position is not that easy. You have to like actually develop that into your muscle. Be patient, be simple, because the idea is that of course there are opportunities out there, and I don't want to rush in any case. I prefer not to even like trade today, but still if there are opportunities as per showing up to the charts, I would be entering into the positions. So